Hello everybody, welcome to the Flow Show, Thursday the 18th of July. Just a quick reminder before we start that if you're looking to upscale your trading, have a look at our trader funding program. As you can see there, we've got a special offer on this July. If you take an assessment, you'll get a free 45-minute one-on-one session with the man himself, Blake Morrow, which is worth the price alone. So have a crack at that. He'll help you, guide you through the TFP and answer any other questions you've got. So a bit of a 2-for-1-ish deal there. Get an assessment and you get a free 45-minute session with Blake. So if you're thinking about it, check out the trader funding program there. Morning, Kay. How you doing, mate?
Good morning, Ryan. Good morning, everybody. I'm doing all right. I'm doing all right. Not looking forward to an hour of Lakiano later, but there is good news because in between we will have the most exciting and excited central banker on the planet from the South African Reserve Bank with their meeting results. So I'm rather going to tune into him than to Lagarde.
Oh yeah, that sounds good. I might join in as well. He's far more entertaining than Lagarde is.
Always a good popcorn moment with him.
Yeah, exactly. Right, we'll check him out then. I'll let you put the link up for that one. Right, let's get stuck into today's stuff. PBOC fixing, still sticking around where it's been, coming under 713 at 712.85, just by about 30 odd pips there, so no big deal on that one. Now, some potentially big news, if we are to believe this source's piece from Reuters, that China is back on the gold buying front. They had held off while prices got that much higher. They've held off for the last couple of months, according to official reserves data. But to someone who is involved in China policy has spoken to Reuters and said that they may start to get back in again, and that price may not be such a big deal now as it was then. It certainly should keep gold on the bid side for now, though always take these sources pieces with a pinch of salt. Apart from reserve numbers, the PBOC and officials have been very, very tight-lipped over what they do in any sort of market manoeuvres. So as I say, maybe a big pinch of salt with that. Kay, any thoughts on that headline?
I'm sorry, mate. I was just replying to a call. Which headline again?
The old China gold one.
Yeah. I'm not surprised that they would start again. This is the nth session in a row that they've been buying it overnight. So I think they, after May-June pause, they're back on the train.
Yeah,
just monitoring those sessions in Asia. Also, in regards to that, I was thinking this morning, now the plenum is over there, we may get a good view on what they really want to do if they continue to buy like tomorrow and especially next week, I would say. I think it would be telling. Then they probably could go on the whole month, you know.
Yeah, exactly. It'd be interesting to see their next reserves data to see if they have started buying again. Now this plenum stuff, we are getting drip fed a few bits and pieces over what they're talking about. It's nothing really exciting or for now market moving. There is due to be a state announcement tomorrow on what's going on there. Bear in mind that a lot of this will be domestically based. Okay, this is for China, for its population, for what's going on there. But obviously, international comments or implications that come from that will be more widely watched by those in the West. But yeah, there's a. I don't know what the time is of this, but there's going to be a state announcement detailing everything they're going to be up to tomorrow. But as I said, we're already getting a few bits and pieces dropping.
Yeah, and I think what for international watchers may be more important what they don't say than what they actually say on markets, because if there's they will probably say that they will continue to open markets also, but if we don't get any concrete measures, it's probably not going to give us too much to chew on, you know.
Yeah, and then next week they have this US execs meeting, all piling over there to China for a jolly up and a discussion with those. So again, maybe something out of that next week. We shall see. Right, coming over to a bit of data. We've had some Japanese trade data out overnight, and exports up, not up as much as expected, but up for the 7th month running. So that's keeping things looking good there. As usual, the trade balance a bit all over the shop as per usual. So we won't bother about that too much, but the activity numbers are still looking healthy. That's the big take from this. A little lower than expected, but you know, still coming with positive numbers, still keeps things going in the right direction for Japan. Now, just before the show kicked off, we had a headline out that these bods that check the Bank of Japan accounts data to see if they intervened or not. Yesterday's data apparently does not immediately show any evidence of intervention yesterday. That was obviously following the little wobble we got in dollar yen. We marked on it yesterday. Smelt like intervention, might have been a ring around, might have been the Trump stuff. You know, you could throw a whole host of reasons at it, but no real evidence of that coming from that data anyway. So we're left guessing, and we won't know any full confirmation till the end of the month when they produce their intervention report. There's been a bit of news from the Bank of Japan's Osaka branch. Their manager speaking to Gigi, saying we want to maintain a accommodative monetary environment as much as possible, and that the next monetary policy meeting is extremely important. So he wants, or he or she wants to keep the easy mood in, which you could draw a very loose conclusion that we're not going to be getting any big hikes if we get a hike at the July meeting. That's one of the things that still needs to be decided. Are they going to go 10 pips, 15 pips, 25 pips even? Not necessarily in July, but whenever they hike again. So that's one of the questions we need answering. Over in Australia, some good employment data. The change in employment coming in at 50.2 thousand, beating the near 20,000 expected, though the unemployment rate did tick up to 4.1% as expected. That's largely in part to the participation rate increasing, so it's not necessarily a bad number there, but showing that things are still trucking along over in Australia. Over in the UK, it's jobs data morning, and again, numbers that probably don't move the needle, and in fact hasn't moved the needle in rate expectations. The unemployment change came in up 19,000, so 1k better than expected, turning around the 140k negative from April. Wages, they came down as expected, both metrics, bonus, ex-bonus, coming down to 5.7%. As you can see, 3 pips down for the ex-bonus, 2 pips down for the included bonus number. Still going the right way. The Bank of England will be happy with that, but those are still quite lofty levels. If they don't want wage gains to go negative or anything like that, or to come down significantly, because healthy wages is healthy for the economy, but it's still running a little bit hot. So that would be something that the Bank of England have been all over wages. Unemployment rate staying unchanged at 4.4%. Claimant count ticked up a bit, 32.3 versus 23.4 expected, so ticked up above that, but came in lower than last month's 52k. So overall, the jobs market, a little bit meh. There's no big, huge worries there. As I said, wages still a bit sticky. Doesn't change things for the Bank of England. So we've come through the CPI, we've come through this. Market expectations for the August meeting around 35-39% chance. September meeting, though, is still up in the 80s, 84%. So, as I say, it hasn't moved the needle that much. Still think the market is perhaps underpricing a cut at the August meeting, but we shall wait and see. Retail sales tomorrow will be the small cherry on the cake. It may not swing things too much, volatile as it is. Any thoughts from any of that lot so far, Kay? Aussie, Japan, UK?
Coming Bank of England's way. You know what? On those wages, you said like, yeah, they don't want to go those wages to get negative. I think if they look at 5.7% wages, just look at that number, and they're at 5.5%. If they want to keep it positive, it actually opens the door for an August cut, right? And that's a little bit my thought that I had this morning, and a little less in sterling right now, because I'm not sure whether it is ECB or so that euro sterling is a little bit bit and cable a little off it, but it might just not going to say completely tip the scale, but get those hesitors over to the cut camp without perhaps completely tipping the scale, but it's maybe just enough, if you come close enough to where your rates are, if you lower them 0.25%, you keep the wages just above to keep the people happy.
Yeah, exactly. Though I can tell you, half the country wouldn't even know what the bank rate is and whether their wages were positive or not. But yeah, I get the sentiment and the rhetoric, and yeah, it's something to think about. I still maintain my view on the August meeting. It's underpriced versus what the market's thinking. And at the very least, I think we probably get one or two of those fence sitters moving onto the cut side, if not enough to actually change rates, but enough just to signal we are on the cusp of that. And then September will probably bang up to 100% on the expectation front. But we've got a week or so before we get to that lot there. German Finance Minister Lindner is not happy. He says Germany is being overtaken economically, seeing other European countries or other countries altogether producing better numbers than the old growth engine of Europe. Do you reckon they'll ever get back to being the growth engine of Europe, Kay? Is this just a temporary slump, or?
I'm a little worried unless they start to renovate and do different things with their traditional manufacturing and stuff. I'm a little worried about Germany. They seem to have a tough time to get the engine restarted, and we are going to have to see what they do about it, because as we stand right now, well, I don't know if they're overtaken by any other European industry or so. I don't no idea, to be honest. But I'm doubtful that also going into that summer, and we know that they still need a lot of like very traditional ways to transport stuff, and with the levels of the Rhine being so low, I always keep repeating it, but it's a bit of the image of Germany, right? I mean, if there's enough water in the Rhine, Germany will do better, and vice versa. But even so, it looks like the engine is really sputtering, and I don't know. They are going to need to revamp a few things. They can. I mean, historically, Germany has done it a good few times, but right here and now, I'm not a great optimist on all German things.
Yeah, it's worth noting that one of the things that is a bit of a millstone around Germany's neck at the moment is they are very heavily trading with China, and obviously with all these tariffs going up and these these spats going on with China to do with Russia, Ukraine, everything else, and the Chinese economy suffering as well. That is probably a big reason why Germany is doing so badly as well. So if there is a pickup in China, if relations with the West improve and trade gets back on track, you can probably expect a big bounce back in Germany as well. Yeah. But just shows what happens if you put too many eggs in one basket, which is what the Germans have pretty much done. Right, coming over to the US data yesterday, and once again, it's another set of data that shows that the collapsing US economy isn't going to go in a straight line. We had 3 months of lower numbers for building permits and housing starts, and that got broken yesterday with positive numbers, both beating expectations and coming in higher than last month. So dead cat bounce, maybe. We shall wait and see. There is a bit of a downtrend still, so it's going to take more than one number to break that. But as we've been saying all through these last few months this year, you can't sit on the data point for more than 5 minutes before it swings around the other way. This does, as I say, keeps things soft landing. Yes, we're seeing softness. Yes, we're seeing some weakness. Housing was one of the watch sectors, but as mentioned, it's not all going to go in a straight line. So what it does next month could be important. If it's negative next month, then it looks dead cat bounce. If it's positive again, then everyone can forget about recessions and whatnot in America. Industrial production, also with some green numbers, as you can see there, beating expectations. Not quite coming in as much as last month, but still positive. Capacity utilization there also increasing, showing that activity is increasing at factories and the like over there. We've had some Fed heads out, a couple. Well, you can probably take Powell, Williams and Waller, and their message, paraphrasing them, is that we're closer to a cut, but not there yet. Powell has been pretty much that way. Williams came out and pretty much said that exact line on Tuesday, actually, but we didn't see that get reported until yesterday. Fed's Waller pretty much the same, but he added that current data is consistent with soft landing and even less of a trade-off in terms of employment. We'll be looking for data over the next 2 months to buttress this view. The exact time of a rate cut doesn't matter a lot. How far we cut rates once we begin is still an open question. So he's giving it a couple of more months before he wants to make a decision. Whether that includes this month or not, I don't know. All in all, it pretty much, stamps out the last expectations for a cut coming in July. Fed Barkin says the expectation of a needed recession to slow inflation has not played out. He's watching the unemployment rate carefully, but also open to the idea that policy is not as restrictive as thought. It's not fully there on services, or we're not fully there on services and shelter inflation. Feels sure the FOMC will debate whether it is still appropriate to describe inflation as elevated at the July policy meeting. That's a bit of a heads up on potential language change, the FOMC statement. No one 25 basis point rate cut matters one way or the other, and says that the issue is when to change the narrative. Any way we get a cut at the FOMC, Kay?
Yeah, and the more we hear of them, the more it becomes clear that September is going to be the meeting, right? They all say exactly the same thing with a few different words, and even actually very little different words as we heard. Today we've got 3 more, but I think they're talking about on funding stuff, so I'm not sure whether that's going to have any importance at all. But yeah, I mean, as we've been saying it, we're getting there and we're not there. So I mean, that's not the next meeting, but it's the one after.
Yeah, and the good news is the blackout starts on Saturday.
Yeah.
But from then, we don't hear anything from anyone. And oh no, that's just reminded me we're in blackout for the ECB. Oh, that's all right. I'm off tomorrow, so you can deal with the with the 26, 27 governing council members that will all be speaking tomorrow. Oh my God, I'm missing that. Yes. That's just made my day, that has. As we know, day after
And you're leaving me alone with them.
Yeah, day after the ECB, they all come out. Nearly. I think last month was a record. I think I counted 18, 19 the day or two after the ECB meeting. Ridiculous. Absolutely ridiculous. Yeah, I wonder why I've been quiet. Anyway, you're welcome to that one, boys and girls. Right. Google and Microsoft apparently might be in hot water, according to a piece floating around yesterday, because apparently they've been helping Chinese firms skirt the ban on NVIDIA chips. So that won't go down well with those in the US in particular. So I haven't seen anything on top of that story just yet. But if you're trading those sort of stocks, keep an eye on that one. Obviously, that headline coming in amongst everything else that was going on in the chip sector and tech world yesterday didn't add to the good news, shall we say, over there. Oil, we're starting to get some OPEC waffle out. According to one delegate, OPEC Plus doesn't see the oil hike plan getting changed at the August talks. No doubt we'll be getting other delegates saying that it will, and then others saying it won't. So we're going to play this to and fro game between now and that next meeting in August. That's it on the news front. Unless Kay's got any gems for us.
No, mate. I think we covered most of it, right? No. Moving on to what's to come.
That's what I like to hear. That's what I like to hear. Right, so no one knows what's going on in dollar yen, whether the Bank of Japan did intervene yesterday or not in that move that we saw there. I'm not going to blame it on the UK CPI data. We just don't know, and we're not going to know until the end of the month, as mentioned. What we do know is that we keep carving through the levels. Haven't yet had a little proper look at up at 157. It didn't stand up for much on the way down. Going to wonder if it's going to stand up to much on the way up. That is an area I'll be looking for. We've messed around. We've been under 156, so that's not much of a level either. 155 is another big level. I don't know if I've got it on my chart. Let's see if I can zoom this out without making it look too messy. Where are we going? So 155 is the number there. I can't remember where it goes back to. Oh, where did it go back to? Oh, it's all too messy. Oh, it goes all the way back.
Oh,
yeah.
Oh, right. You're looking at long term. Oh.
Yeah, very long term. It's one of those ones, but I've completely messed it up. Anyway, 155 is the level I'm looking at. It's been one of those historical ones. It was a bit of a resistance point on the way up, then it became support, then it became resistance, support, resistance, support. You get the message. And in the last knock back in June, it was support. We had a little mooch under, but it held that again. So this is really the level here. Numbers don't matter to the Ministry of Finance. You've got to remember that. So if you're trading this one, trading off your tech levels, you don't trust it too much because if they want to hit it, they'll hit it, and they don't care what coloured lines you've got on your chart. So just be very careful if you want to trade things like that. I did have a little play into 157, managed to get a couple of pips out of it, then get knocked out on the rest after it broke. So be very light, be very nimble. Don't go putting your house on picking these levels. If you want to have a little scalp, try and get few pips under your belt, then do trade it very carefully. Kay, what do you think about this one? Rallies keep getting hit. That's pretty obvious. Can it go much further?
What we were saying yesterday, the different approach. Because we had them like a couple of days intervening in smaller amounts, and that is probably going to keep the speculators on their toes now, because you never know if dollar yen goes up on its own 100 points, it may now be enough for them to do another guerrilla style intervention. And then I'm thinking about levels perhaps back up to that 157, 157 and a half. They may already continue with some smaller interventions just to keep the market quiet and buying time until the next Bank of Japan. I think that is one of the reasons. The other one I really think was because the yen was very weak against everything, absolutely everything, and not only the dollar yen. We've been talking about that so often that I mean all those yen crosses were like really shooting up into the moon, and that was just too much for them to bear. 155, I agree. It's the next level. It's also around there that we find the bottom of the daily cloud, give and take. Well, give and take a few pips. It's more around 155 and a half, but in intervention times, don't 40, 50 points don't matter too much. And if you look at the 100 DMA, it's also at the 155. We've got a bit of trendline support around 155. So that's the big level. If they want to scare the market a bit more, they push it below there, and then perhaps we are going to see another leg of I don't know, carry traders or other speculators going out. But today, specifically, it's bouncing a little bit, and it's not that the dollar is moving much, but I have the impression that we are, globally speaking, we also see a small attempt of equity market stabilizing. Yields are not doing much. We may be, whether it's the eye of the storm, I don't know, but we may be in a bit of a calming period. And who says a bit of calming period is, I guess, going to naturally just keep dollar yen from falling much further, or the yen pairs, and we actually see a little bit of a correction. But I would say it's just correction, consolidation. I wouldn't perhaps read too much in it today unless we get another set of those Philly Fed data, who normally are not your biggest market mover, could in days where there are uncertainties flying around, could be a bit of a mover. And imagine that we got a good set of data. We may be back at 157 before we know it in the dollar.
Yeah, we got Philly Fed and jobless claims is the only US data today to keep an eye on. So yeah, not a big number, but one to keep an eye on anyway. And obviously those jobless claims, if there's any big variation for that. Now, just back on the yen, and I'm not a huge fan of this stuff, but it can give you a bit of an indication. Tomorrow we get the CFTC positioning. Now, this data is based on futures. So as you can see there, this is yen specs. So yen specs have been short yen, since 2021. And I'm not keen on this data too much, because we don't know what these shorts are. They could be hedges against option trades. There could be a lot of things. It doesn't necessarily mean that the whole world is short and been continuing to get short. There's different things you need to know about this. But if you just take it at face value, if this intervention is shaking out the speculators, then you would expect to see these shorts lightening up. Now, this data only is produced on a Friday, and it's taken from the close on a Tuesday prior to that. So it won't contain the whole week's worth of stuff. It's a bit lagging, but it would include the interventions that we saw last week. So just keep that in mind if you're seeing these numbers jumping or getting less negative, showing that shorts are folding a bit. As you can see, we've come through all the interventions and everything, and these numbers have just kept growing. So as I say, just a rough guide to look at, but don't set your house on it or set your trading strategies on it for the next 6 months, but just keep an eye on that. And if you want to do some digging, you can look into the COT report, the CFTC report in full, and you'll see what all the asset managers and the financials are doing with their positioning as well, just if you want to get an idea of that. Right, so that's it on the yen anyway. We don't really need to talk about the ECB. It's a dead duck. I think the only thing that we might be looking for is just some greater indication that September is a possibility, which is going to be natural. They're looking to cut again. They will cut again. Just depends whether they decide that the data is doing enough for them to signal a cut again. Obviously, September is a forecast meeting, whereas this one isn't. So yeah, I think that's about the only thing I'm looking for, just an indication whether September's on the table more than what the market expects. Either way, market's pricing it, so I'm not expecting any big moves around that. The real risk is if there's no signals given about a rate cut, but I think that's a pretty high bar, Kay.
I'm just scared from where Lagarde is going to do her press conference. Whether if it's in a taxi, it's okay, but if she's still lying on her telling bet, I really I'm going to switch off. I don't want to see that. No, yeah, well, you know, as I said, I think I said it on the Flow Show or somewhere in the room, and I don't think that she will stay more hawkish than needed, looking at her background. But so I do think that she will leave September on the table. The surprise trade would be that she says like, "Oh no, we are nowhere near anything." That would really be a surprise today. But I'm with you. I move on. And of course, the algos, the some people in the market, short-term traders will pick every word apart, but I'm not expecting any long-lasting effect from this meeting either. And you know, just simply, I think September is on the table, and that's it. You know.
Yeah, exactly. And it's still looking like a big coordinated trade.
As
Fed,
well.
Bank of England, the ECB, and maybe some others that all go in September. Yeah. And that is a thing to think about. UK schools break up tomorrow, so you're going to see the UK liquidity dipping a bit. All the parliaments and whatnot will be closing soon if they're not closed already. So we're going to enter that summer break period where we're going to see liquidity dropping. And if central banks have all kicked the can, these July meetings, nothing doing till later in the year, then we're probably going to see volatility dropping quite significantly over the summer, unless the data points give us something else to move on. So just bear that in mind. We may be heading for further small ranges over the weeks ahead. Right, let's get stuck into some prices. Looked at dollar yen. A quick look at cable. I did try a little 130 long yesterday, just testing this break point. We're back under it this morning and give or take a few pips holding below. So this one, it's at its moment. It needs to get back above there to continue this phase of the up move. If not, then perhaps we're going into a bit of consolidation. We do have those retail sales, UK retail sales tomorrow, but unless there's a big, massive variation one way or another, it's probably not going to move things that much. But cable's still looking well bid. It's keeping the longer uptrend going that we've seen since April. So that's all good. It looked like the trend might have been a bit of trouble here, but it managed to break out of that and push on back higher. Now, I did flag this in the room, and I just want to show you guys and girls just some long-term tech. I know Kay pulled up some of this for euro sterling, but just on the bigger picture, we've got the potential. Well, it's looking very likely that we're going to close above this 200 weekly moving average. That'll be the first time it's done that after being below since back in 2020. So just keep an eye on that one. These moving averages, it's not so necessarily that you'll trade off it intraday, but you look at these from a closing basis. It gives you an idea of where the good support's going to be, and it's coming in along those areas there. So 128, what is it, 50, call it, is going to be the support area if we close above there. So just keep an eye on that. You can see what the 55 weekly moving average is doing, and wider even still.
Stay on that picture just for a while, and look at where it stopped just early 2024, and then a bit later in 2024 as well. It stopped on that moving average, right? So I just wanted to add to that, and I've been saying it on the euro sterling as well. Ryan and I are no fans by no means by moving averages, unless they are really long term and the wider ones, and then they have shown up in the past. And I wouldn't look at any moving average really, even below the weekly. But sometimes when we look at those longer term charts, there are things that start to pop up. Okay. Look, for example, back on this picture, somewhere end of 2022, that green line where the cable stopped on the way down, right there. You know, we couldn't get below it, but when we got below it, we accelerated. So on the long term, those things may work because, well, I mean, out of experience, I know that some models include those things on the longer term, for like bigger time frame models. They do look at that stuff as well. So there are some of them that may come in handy when you look at currencies or any other instrument for that matter. But then keep it to the long term. I'm never going to look at an average, even there on my pictures, just by automatic because it's automatic. But on those longer term ones, they sometimes can give you a hint. And as Ryan says, don't look at them every 5 minutes or every day even. Just look at them, know them, and make a note of it, what they are, and that may sometimes be of a help.
Yeah, absolutely. Because you know you can get moves through it. You know, take care. You know, very undecided, but you know we couldn't open or we couldn't keep a weekly candle above the level. That's the key. It's when you start to see it keeping below. You know, that's when you pay attention to it. But I don't look at moving out up. DMAs, daily moving averages, or moving averages on the daily chart, are some of the most watched moving averages in trading. That you'll hear that reported by Reuters, by Bloomberg, by everyone, and that's the art of tech. It's not that coloured lines stop a price. It's that if everyone's watching it, and there's a decent amount of money trading it, it becomes self-fulfilling. That's all technical analysis is. The more people that watch it, the more people that trade it, the more chance it has of holding. It's not maths wizardry or anything like that stops a price there. It's just the amount of money trading off the same number. So I won't look usually less 4 hour. I might have a look at on moving averages, but anything less than 4 hour, no, I'm not interested. You'll see it on my charts because I can't be asked to switch it on and off every time I switch the time frame. But daily, weekly, monthly, they're all important. And as I was just about to show here we have up against the 100 monthly moving average, and you can see what a longer term one it's been. We've not managed to hold or be above it going back and since you know, the early 2000s. So a close of the month above there and opening above there, what are we at, 129.35, would be a potentially significant event in terms of keeping the momentum going and seeing cable pushing on. And then, you know, long term, you're talking 135s, 140s maybe. But it's not going to go in a straight line. So just keep an eye on it. You know, we're up against it or up around it, close by in long term terms. So that's another one just to keep an eye on. And as you can see there, well, not really, but it's there. The 55 moving average is there as well at 128.25. So obviously we're well above that. But again, that will give you another marker to lean against for the longer term. So anyway, that's actually a lesson for today in moving averages. What's the time, Kate? I'll bang it over to you.
Go ahead.
Whoa.
Yeah, no,
Yeah.
okay, I can do it. And I'm just going to have a quick word because we have SARB as well. I did show the rand yesterday, but just perhaps showing it again.
Yeah, you want me to pass it?
Yeah, I can.
Okay, there you go, mate.
All right. Just let me quickly grab it. Grab the rabbit. Okay, here we go. So here we are, SARB today. Expected no move, all right? And we also had already some articles out from experts that the SARB is very much looking at the Federal Reserve before moving. So, but they just had their election. So I am not going to completely, I mean, it's a 90% base case that they don't move, obviously, but I'm not going to completely rule out that to support some that new government in relaxing affairs because they still are at 8.25% over there. I'm not going to rule out like that little bit of a surprise 25 BP cut because we saw CPI just sleeping, not really dumping, but sleeping. Big picture still the same: 18, 1790, 1785. That is what's going to have to hold after the SARB. If we would get that surprise cut, I think there is a chance we are moving back into the 1860s. I'm really running on extremely low positions, but my favorite side is still that this thing is going to hold at one stage and starting to go back higher. I need to mention, and before that, my classic morning update. We talked about that earlier on the show, and look at what happened again. And I'm going to go for once. I'm going to go on a shorter time frame. Look at what's happening. What happened again in gold overnight. So yesterday, towards the end of the session, mooching around here in the 50s. Asia comes in, here we go. Your traditional 10, 15 bucks. So that means to me that China is still interested in buying, and we've been saying it actually not far from the start of the month. I think they're back in buying it now. Is it going to go further? That's the next question, because as I've been saying, I've reduced my positions because I'm starting to find the move a little, not overdone, but a little stretched perhaps. So we had those two peaks here. We came back a little bit, 24.5. Look at 24.5, and if ever we would get like a bit of better dollar data, perhaps we are going to see a test of it. The key to this now is to see whether the US is needing an extension again to the high, to the top side, or whether we are finally going to test the resolvence of the 24.5. That's a question for F.A.C.E, Bran, about RSIs, because as everybody can see on my charts, I'm not looking at any RSI. Sometimes only when I'm forced to. That's like the other thing you're always looking at, and that I haven't been looking at for the past 40 years. So that for gold. And then I'm actually going to pass it straight back over to Ryan. Oil. 80 bucks. You see 50% here of this move down, bit of a horizontal support here now. 1, 2, 3, 4, 5 touches, 80 bucks. It really is where oil is now finding the most interest here. Okay. The highs are lower, yeah. So to me, it's not out of the woods yet, because every time we see a decent spike, it comes straight back down. But I would say, I mean, just respect this broader range, 80, 84.5, 85. That's where we are in globally speaking. Okay, then once we break out of that range, it's probably going to take a fresh direction for multiple dollars, but I'd say this range is starting to look good enough now. To go and test back 85, we need to overcome 83 bucks. Okay, so as long as we are below 83 bucks, I would say that the range is either narrowing or we have to respect those lower highs, and perhaps this is looking like finally we may have a move lower. I'm not showing this very often, but it's something that now has started to catch my eye also, because we had this same traffic zone before here, before we took a big direction. So I'm starting to look at oil right now. And with all that, we just finished on the euro dollar triangle, still there. And watch what's happening to this afternoon if we would go and have a look at 109.7085. Okay, 109.7085. That's your gateway to have a test above 110. If it doesn't work, if the ECB says meh, we can still mooch around, and then perhaps depending on the Fed, actually even come down a little bit back to 108 or so. I wouldn't even rule that out for today. And with that, Ryan, back over to you.
Thanks, mate. I just want to take it back quickly, just because I wanted to answer Ali's question from yesterday. You know, about trading reversals or try and reverse trades. Ali was struggling with it. Long euro sterling, and then could have reversed it into a short and didn't. And there's two opposing forces with doing something like reversals, or any trade really. A lot of people are wired with a bias. Okay, when you get a bias, when you think something is going to go somewhere, okay, your bias takes over. Okay, sometimes you can be blinkered by it. You can only see one direction. What all traders need is objectivity. Okay, doesn't matter whether you're trading reversals or not. Objectivity takes away, or it questions your own bias. Okay, so if I've been thinking the dollar's going to be weaker because we're seeing some softening in the economy, that doesn't mean I'm going to sell the dollar with my eyes shut. Okay, I'm going to be objective. I'm going to be objective with my trading. I'm happy to sell the dollar, but only if it ticks certain boxes, either hitting levels or not. Or if I have a level and it goes straight through, then I'm not going to do it, that sort of thing. So, but reversal trading is very difficult for people who have bias in their trading, a lot of bias in their trading, because it's not easy to think, well, I want to be long, and all of a sudden, there's an opportunity to be short. I've learned over the years with objectivity, I can have a long-term position in one thing and take a short-term short in it just because it's hit a particularly strong level. So I can trade opposite to my own trade just because of the text and the strategy are different. But reversal trading can be difficult. There's two ways you can do it. You can be short something, and you know this, I do this a lot. You can be short something. So let's take cable as an example. You could be short hitting the 130 level because it was a pretty decent level to hit shorts at. We had all this action up here. You can be short this because of that level, but you can try a break.
Not sharing your screen, right?
Oh, why not share my screen? That'll help, won't it? Let me do that. There we go. So, see that all right, mate?
Yep.
Yeah, so cable, you can be shorted into 130 because we saw it was a decent level. Okay, so your bias is to sell, but what if it breaks? And when you get price action that stays below, try several times, you know the rule. If we knock on the door too many times, likelihood is we're going to break, and the more times we knock on the door without breaking, the bigger the break might be. So in this case, you traded a break, you got up to 130, 40s, 45s. Okay, not a huge break, but I actually had a buy stop ordering at 15. I might have made 15, 20 pips on that before getting turfed out later on. Not a huge amount, but my bias doesn't matter. I'm not trading short because I feel like being short. I'm just trading the level. And that way, that's how you can reverse a trade. Be short, reverse it on stops if a level breaks. So you're just trading the level. Now, trading reversals on fundamentals and things like that is a bit more difficult because the boat tends to turn much slower. When does all this dollar selling that sent cable up to 130 turn around? Trading reversals on these sort of patterns are very difficult because we keep moving in the same direction. Stocks is a big example. S&P, how do you trade a reversal in stocks when all it keeps doing is going up and up and up and up and up and up? Well, you have to set your parameters correctly. You can't be short for 50, 60 pips because you'd be busted out every trade you did in this one. So you have to trade it on the very short term, and you have to keep your expectations very low. Have we got a top here? It's looking like a top at the moment. We haven't had a confirmed top. We haven't had a decent amount of price action. We got, maybe you could call this a double top. We've broken through some supports. Have we broken through any major supports? Not yet. Next major support is down at 55s. So is this a reversal? It's an intraday reversal. You've got to be careful with it. We're not necessarily finished. We've seen this pattern time and time and time again over the recent months. So as I say, reversals are about objectivity. Don't trade the bias, trade the price, trade what the chart's telling you. Don't get married to your bias, because that's what causes you to be offside. I think this is going to come down. I'm going to keep selling it, and then as it breaks up, no, it's still going to come down. I'm going to sell a bit more, and then you find yourself 100, 150 pips offside, going, why the fuck did I do that? When the price action clearly showed me I shouldn't have been doing that. So reversal trading is no different to any other trading. Be objective, trade the levels, trade the price, and match your objectivity against your bias. Is your bias working or is it not? And that's the way you do it. Kay, you got any thoughts on that one?
Wow. There's so much difference in trading short and long term. Because where I will perhaps say something slightly different. If you trade long term, reversals matter, and bias will matter perhaps more even than price. Because if you say, for instance, but a bias in a long term, well, for me at least, should always be based on fundamentals. Like, for instance, or in, let's say, medium term. Let's take an example. At the end of last year, big dollar drop into the end of the year, and but the data were not supportive for this kind of, well, they were half supportive, but not the GDP and stuff like that in the US, for instance. So after that, there was, well, I had a pretty strong bias that Q1 in 2024 we would have like a pretty big revival of the dollar versus some stuff like dollar Swiss and especially the low yielders, right? So there, the bias will be based on fundamentals, and then price is actually somewhere secondary. But timing will also be more important, because it didn't really matter whether you bought dollar yen and let's take dollar yen for instance. It didn't, in a way, it didn't matter whether we bought dollar yen at 139, 140, or 135, or 142, because the bias was based on fundamentals, right? So and on expectations for central banks, for instance. So then the price matters less, but the direction and the timing is going to matter more, because you want to recognize when the bias that you're starting to form is starting to materialize, and that's where timing comes in, right? So that matters more than price. The shorter you go, the more the price will matter to trade reversals. That's just my opinion. And then you really have to get very deep into the price action and prices of things and technicals. The shorter you go, the more technicals, I guess, will take over. But can you call it reversals or corrections? That is the difficult part for me at least. If you try to trade reversals on the short term, if it's really a correction, or if it's a trend change. And you're rightfully, Ryan, brought up the S&P. Since what, 4,800 or something, 4,006, 4,800, I haven't seen anything else than people calling for reversals and this is the top, this is the top, this is the top, it's finished. I mean, yeah, from there. I mean, 4,800, retest, and that's it. Now we're going down the whole way down. We're only, what, 15 or so % higher, or nearly 15% higher. That is where you need to look at what the fundamentals are telling you, right? Because all those people trying to call for the reversals have been pretty severely burned. Even the move down from 5,200 or just above 5,200 down to down to 5,000. That was supposed to be a big reversals. Look where we are 3 months later or 4 months later, right? If you call for reversals on longer term trend, be very, very careful what you do. If you trade short term, you're trading corrections. That's a completely different thing for me. So that is more my approach of how I'm trading. It stops and then it comes back down in this case. But is it a correction or is it a reversal? Once you are in that position, then the price action will tell you what it really is and what it will become.
Yeah, absolutely, mate. And this is why using fibs is so important for me, especially over the long term. Okay, because Kay's right. Once we were falling off of here, everyone was going, "Oh, it's going back to 46, going back to 44, going back to 45, whatever." We couldn't even get to the 38.2 fib of just that leg. Forget the leg year or so before. Just this leg, we could not get back to the 38.2. So this is a big move. Don't get me wrong. 200, 300 pips. That's a sizable move for anyone. You'd love it, but look at it in the context. It's just a pullback, and it couldn't even get to that fib. This is why I use fibs, because it tells you when you're trading this, when you're looking at this intraday, you're going, "Oh, this is a huge move. You know, we've collapsed. Oh, I've lost it now." You know, and everyone comes out. This is the end of the stock market. Blah blah blah. That was it. That's the top. And here we are trading around 56, 57 again. So use the tech, use the price action. You can get caught up in this, in the short-term noise. Oh, the end of the world, the end of the stock market. And it wasn't. It wasn't even a shallow pullback before it rocketed on again. So, as I said, don't marry a bias. Have an idea, but look to see if the price is going to break that bias, break the market bias, break the market sentiment. And that's why you use things like fibs to change it. If you've got down here, you could try along. 48, big break point, 38.2 fib. You know, I would have bitten your hand off for a long down there in that move. And look at what it would have got you. But, you know, we can't trade backwards. It never got there. So we move on. And now we have to play the same guessing game up here as well.
And just to finish on the sterling that you showed a bit earlier, those longer term cable levels and the price action that we've seen since April and etc. So that's this picture. No. Just go back on the shorter term, because it will be easier. Thank you. So we've seen this move from what is it? April, 26. May. We started to move up, then correction, then moving up to 130. To me, if you then go back to the long-term picture that Ryan was showing, now for this to reverse, it will have to, because my bias is still that sterling is doing relatively well. That's the bias that I have over this whole period, and I've been saying that many times. I still think that sterling is relatively okay. For these to change, we will have to start to break the longer term levels again, or even corrections of this move, which are on my picture as well, not starting before 128 and a quarter. Yeah, 128.60, 128 and a quarter, somewhere there. The thing is, in the short term, we've seen a rejection of a couple of levels which were just above 130, 130.20, and 130 and a half is a level. Short term, I will respect that price action, because as a matter of fact, I'm not long cable right here and now, because I don't know. Actually, I don't really know what the dollar is going to do either right here and now. But my longer term bias hasn't changed. If I see 28 and a half, 28 and a quarter again, I'm going to remember those levels, and I'm going to remember also, oh, here we are, 38.2 or 23.6 or whatever. Get that fib level, because it's coming there as well, and then I'm starting to get back long in the cable, because my overall bias has not changed. Okay, so this is not a reversal. Getting back even from 130 down to 128 and a half or so is not going to be, or 129, let's say, is not going to be a reversal yet. So that is the way that I look at like reversals and things. We can trade the positions, because I'm still a spot FX trader. I trade quite a lot, but the overall bias is still remaining.
Yeah, very much. Well, that's been a good show. Well, nearly clocked an hour on that one. So thank you very much, Kay, for all that. Hope
Thanks,
that's given you, Ali, and the rest of you guys and girls a bit of insight. And don't forget, we're always available for this sort of talk in our chat room. So if you've got any questions like that, do hit us up. Do join our chat room and come and hit us up in there. Happy to talk, or take one of our coaching sessions if you want some one-on-one time and get real deep into it. Anyway, on that note, before Steve starts telling me off for running over time, we should call it a day. Kay will be your captain tomorrow as I'm off. So have a great rest of your trading day and have a good day tomorrow. And we'll see you. I'll see you on Monday.